In this lesson, we're going to look at about 3 different types of time factors that most people aren't aware of and very few people use, but they're very simple to do. You can do them in any market, any time frame, and they're really valuable. They really give you some valuable information that you can use to make specific trade decisions. So let's take a look at the first one, which is a real simple time factor to help you identify what should be the maximum time target for a trend. We usually use this for a wave 3 or a wave C. It has other applications. However, the primary application is to identify what should be the maximum time target for a wave 3 or a wave C. So let's take a look at a few examples. Real simple to do. Here's an example. I think this is notes. It's bonds data, bonds daily data. And let's take a look at this section down here. Obviously been some sort of a impulsive trend down. And from my point of view, at least, this looks very corrective. This, for a while, could have been a 1 or an A and a 2 or a B, but because of this essentially sideways move, and if we looked at the intraday data, you'd know it'd be a very choppy move. More than likely, we look at this as an A, a B, and a C. The first thing we always do when we're looking for like a C or a 3 is we do an alternate time projection. Well, this was just a 3-day advance. This is already is that day 4, day 5? So it's past the 100% alternate time projection, which means that this section in time, this potential wave C, has already exceeded the time of A. What would typically be the maximum time? Well, it would be the low to high. So let's just do that. You can see how they're done. So let me put the low to high in, and then we'll talk about it. There we go. So I've measured this low to this low, and that number of bars forward would be, in this case, it's February 2nd. So that's measuring as if this wave, potential wave C, I should say, would be the same length in time as the A and the B. And typically, that would be the maximum time before a wave B would be complete. So again, typically, or often, we would measure a low to low, or a high to high. Most people don't look at it as if a low to potential high. And what's just really fantastic about this is it's a real reliable time factor to identify the probable extreme for the target. Let me just add a couple days onto this. At least as of the last bar in the chart, the high was made exactly on the low high. There's the next bar. This is actually the bar on the day that I'm recording this. So if we wanted to identify the end of a wave C in time, and if the C has already exceeded the length of time of the A, then it's got a good possibility that it will be complete by the low to high. Let's look at some more examples. Let's take a look at this intraday data. It's the ES futures contract, 240-minute data. And let's just go into the assumption from this low, we had an advance, and it looks like an ABC correction, and then this looked very much like an impulsive advance. So I have this labeled, it would be the typical way we'd label this, a 1 or an A, a 2 or a B, and we can see as of the last bar of the chart at least, it's exceeded the 100% alternate time projection, the first one that we always do. It's exceeded what would be typical for at least a wave C. Very typical wave Cs are 100% alternate time and are 100% alternate price projections of the wave A. What would be the probable maximum time before either a wave C or a wave 3 is complete? Well, typically it'd be about the 100% low to high. In other words, this potential wave 3 or wave C would be the same time range as the 1 or 2 or A or B, however we want to look at it, the total time of this section. So let's just do that, the 100% alternate, or excuse me, the 100% low to high. So that's several bars out, actually falls in the following day from where this last bar is. Let's add some data. So as of the last bar in the chart, we're 1 bar off of the low to high. Now keep in mind, the low to high is not a time target to complete the trend. It's the probable maximum time before a comparable reversal to what I've got labeled, the 1 or A or the 2 or B is made. So in this case, it would be the probable maximum time for the wave 3 or the wave C. And we can see as of 1 bar before this time target in the 240-minute data, the market has indeed turned around. I'm going to add some more bars on the chart. So do you think that would have been useful information to have, at least if you're, certainly anyway, a short-term trader? The market has had the largest correction against this little impulsive trend since this low, within 1 bar of what is typically the maximum time to complete the next reversal of similar degree in this 240-minute data. This is also another example, right up to date as of the time that I'm recording this, the day I'm recording it on February 4th. So significant piece of information. We're going to look at a couple more. How might you use this? Well, if we're looking at this as a 1 or A or 2 or B, and we came right up to what would be typically about the maximum time for that wave 3 or C, and then we have a correction right from that time, then we'd want to identify what can the market do to either avoid this as a wave 3 or C or confirm this as a wave 3 or C. Well, certainly the first thing we would do is we would draw a horizontal line. I mean, this is 240-minute data. It's not daily data. We draw that horizontal line across the wave 1 or A high. We also want to take a look at this. This is a ABC correction. That's usually not a wave 1. Wave A can be an ABC. Wave 1 should not be. And if the ES were to trade into the range of the 1 or A, that would be a real wake-up call that more than likely this is a wave C. So as W.D. Gann said, we use all the tools all the time. So the timing tool really helped us identify, particularly if we're a short-term trader, the end of this impulsive advance, to which we would then probably have a reversal and a correction at least of similar degree to this. So on the 240-minute data, this is only about a 2-day correction. But if you're a short-term trader, that's quite a bit. So hopefully you can see how we'd use this information. Let's look at some more. So this is Euro data, daily data. We had a decline, looks like a nice 5-wave decline. Came up for essentially a double top. Could be a wave 2, didn't exceed, at least certainly not on the closing basis, the original or where the decline began. And then it began another decline. So let's do a couple time factors. First, I'm going to do the 100% and the 162% alternate time projection. Frequently, a wave 3 is around the 162% alternate time projection. Let me bring the data up there a bit. There we go. So here's a couple pieces of information we have. Number one, the 100% alternate time projection is just about 1 more bar from the last bar in this chart. And there's the 162% alternate time projection. I'm also going to add the high to low. That should be the maximum target. Get that in there. High to low is about October 8th. That should be the maximum target before a reversal, somewhat similar to these reversals. It could be less, but it should be at least more of a correction than anything since this decline began. And of course, so far, at the most, it's just been 2-day correction. So something of a little bit larger degree, it would indicate that this section down would be complete by October 8th. Remember, it's not really so much a time target for a reversal as it's the probable maximum time before a reversal is made. And it happens to be just one day off of the 162% alternate time projection. Let's add some data. There we go. It made a new low well after the 100% alternate time projection. Ooh, it's sharp decline. Let's just keep adding some data. So here's where we want to take a look. As of the last bar in the chart, this is 1 day before the 162% alternate time projection, 2 days before the high to low, which would typically be the maximum before we make a reversal greater than any of the reversals or corrections since this decline began. Let me add some more data. Inside day, outside snapback reversal day, right within this time period. So right at this time, we want to be aware of, again, it depends on our time frame and how we're trading, that sort of thing, that more than likely the euro's in a position to complete a low and a reversal greater in time and price than any since this decline began from right around in here, and take appropriate action. Let me add some more data. Well, as of that point in time, we obviously went down 1 day to a new low below the lows here and a new closing low, and then flipped right back up. So again, the time factors aren't perfect, but they're definitely a wake-up call to understand that you're in that position, in this case, a probable at or near a maximum time to complete a low, both because of the 162% alternate time projection and mostly because of this high to low. So the high to lows as well as low highs, I use them almost every day on every type of market to help me identify what is the probable, approximate at least, maximum target before we make a reversal of greater degree in time and price than anything since that trend began. And I know you're going to find it real useful also. Let me go to another example. So this is gold daily data. Let's take a look at this data as of the last bar of the chart. It's obviously been in a bull trend, an impulsive bull trend, higher highs, higher lows for a few weeks. And as of the last bar on the chart, gold has declined to below the last swing low. Now that's indicating that the trend is reversing. More than likely it's reversing from this bull trend either into a corrective decline of greater degree than any of these 2-day corrections on the way up, or maybe reversing into a actual bear trend, which will eventually go to a new low. So we don't know what's going on, but the lesson here is we cannot use this high to project the probable maximum time for the next low. Why is that? Because this is a different trend section. This is a different characteristic of the market than now we have a bear trend. So we can't use a lower high and then a higher high to project a low within a new trend. I hope I'm making sense about that. We could use a high and then a lower high to project a potential maximum for the next low, but not the two recent highs when it was a lower high followed by a higher high, then to project, in this case, a lower low. So we have to use those projections that are related to the current trend or counter trend. Projecting for a low, when we made a new cycle low here, we've taken out the low that was in between the last two highs. It's indicating that this decline is something other than a comparable correction to which these declines were. So in fact, I'm going to add some data on, and let's see how this can be useful information. So I've added several bars on the chart, and we can see as gold had declined, this is right where we left off before I added the bars on, had a decline and then a little cycle high 6 days later, another decline, a little cycle high 6 days later. Now, as of the last bar of the chart, gold has been basically straight down, hasn't made that kind of 6-day cycle, we're in day number 5 as of the last bar of the chart, making a new low. So let's use our high to low to anticipate the probable maximum on the downside before a low comparable to one of these lows is made. And we actually don't even have to do that. We can just see that it's the next day, day number 6. I'm going to put it on anyway, and then with a couple other comments. So the high to low, that would be 6 days. More than likely, by the next trading day, gold will make a low comparable to these lows, and that is with a 2 or 3 or more corrective rally following it. So how can that be useful? It can be useful for a short-term trader. It can be useful to understand the position of the market. The lesson here is that we're using in a bear trend from one high to a lower high, and then projecting the next low. From a high to low, but the second high is a lower high. So that's why from this lower high into the extreme high before the market turned around, that's not relevant to the next low anyway, not in the high to low sense. Let me add some data on the next day. So we knew the day before, we're at the probable extreme before we get at least a reversal. It's going to last a few days. So do you think that'd be helpful information to have? I hope so. I use this almost every day, all markets and time frames, sometime for some major reversals. We look for the maximum time of some major reversals. Let's look at just one more example before we move on. This is the GDX daily data. And let's take a look at the market as of the last bar on this chart. We're beginning a new bear swing down from this August high, which made a high above the last swing high. So more than likely it was a greater correction in time and price than anything into this low. So we're beginning a new series on the way down from this high. So we have a decline, obviously an impulsive decline, obviously a corrective rally right to the 50% retracement, and then GDX returned to the bear trend to a new low. So we might be interested in wanting to identify the next low that would be greater than these 2 to 3 day corrections and possibly equal or greater to this correction, which lasted 3 to 4 weeks or 2 to 3 weeks. So let's look as of the last day on the chart. I've done the 100 and 162% alternate time projections of this decline from this high. As of the last bar in the chart, it's exceeded the 100% alternate time projection. The 162% alternate price projection is a few days into the future. So we might also want to get an idea of, well, if the GDX continued to decline, what's probable maximum time before we get a correction, similar to this type of correction, if not the end of the bear trend? So let's do the high to low. So once again, we usually just do the high to low once a market has exceeded the 100% alternate time projection, because the high to low is always going to come after that. And that's a key time factor to look for. And once the market's exceeded that, then we look for other time factors. So we've got two key time factors here. Number one is the 162% alternate time projection, and then the 100% high to low. And the October 6th is not the time target to complete a low, but it's the maximum time probable before a low is completed. So should the GDX continue to decline and reach anywhere near that time target, we'd want to be extra careful about looking at the pattern position, the price position, the momentum position, etc., knowing that we're getting near that extreme from when a low similar to this low, if not greater, is probably made. So let's add some data onto the chart. So as of the last bar on the chart, I don't know if it's finished yet or not, but we're getting pretty close to the 162% alternate price projection. So we're getting into that area from where a low is probable. And we know just a few days into the future, it's almost a week later, that would be the maximum time. So there we go. This is really critical information to have. Number one, it looks like GDX made a 1, 2, 3, 4, 5 into this low, a couple days before the 162% alternate time projection, then went essentially sideways for 4 or 5 days. See where my cursor is? That's on October 5th. We know that 1 day later would be the probable maximum time for a low, and then it looks like it's already completed that low as of that period of time. So, as W.D. Gann would say, time has run out for this bear trend. More than likely, the reversal has already been made. So do we have to pick the bottom or pick the top to have a high probability trade set up? No, we don't. We just have to understand the probable position of the market. If it's in a position to make a reversal, and about that, what is the time frame of that reversal? So it would appear that the GDX is in a position to have completed a low at least comparable to this low, if not of greater degree. Of course, we'd have to get more data on the chart, momentums and our price position, etc. But the time factor has said time has run out for this portion of the decline, and we should now begin either a correction similar to this one or a bull trend. So really useful information. Again, our objective is to understand the position of the market, what confirms or invalidates that position, and what is the probable outcome from the position. I've added quite a bit of more data onto this chart of the GDX. This is the time factors we're looking at for a low. Boy, just had a terrific advance, actually took out the last swing high, correction, then continued to advance. So I've put in the 100% and 162% alternate time projections of this advance from this low. Should I add in the low, low, high time factor to help me to identify when the probable maximum target is for a high? Well, there's no reason to do that unless the GDX continues to advance beyond the November 29th 100% alternate time projection. If the GDX should do that, then we'd be in a position to do the low to high. But until that time period comes, until after November 25th, which is the 100% of this low to this high, it's not relevant. So I'll add some more data onto this chart, and let's see if we get in a position where we would want to do that. GDX made a very short swing up to this new high and then turned around and came down, traded into the range of this initial advance. So once again, that time factor of this low to high is irrelevant. The GDX didn't even advance into the 100% alternate time projection.